Good day, Matrix. I am going to be going through task 13.5. For week 1, term 3, you are required to please complete task 13.6 and task 13.7. Based on the corrections that we are going to be going through right now, it will be much easier to answer 13.6. Alright, so let us do this. Please refer to your textbook if you are not able to clearly see my textbook pictures. So Vilakazi Shoe Factory manufactures a wide range of sporting shoes. The business operates 2 divisions, the manufacturing and the selling. So they tell you to round off the calculations to the rand. Alright, please pay attention to instruction, especially as you prepare for your IEB exams at the end of the year. You need to prepare the production cost statement, you need to prepare the income statement, and then you need to work out the unit cost of producing the shoes. And then you need to calculate how many shoes were sold. So we're going to be doing that all today in this lesson. So there is our information that has been provided to us. They gave us our opening balances on the top. They gave us what happened during the year, and then the totals of the wages, salaries, depreciation, insurance, and so forth. Then they also gave us the stock at the end of the year, the balances at the end of the year, and never forgetting additional information. What do they say about our additional information? Number 1, the factory manager was given an increase of 5,000 Rand per month from February 20.8, but the bookkeeper forgot to process this increase. Pay as you earn amounts to 20%, pension fund 8%, UIF 1%. The business contributes on a rand for rand basis. What does rand for rand basis mean? For every 1 rand that my employee puts down, I, the employer, will also put a 1 rand down. If the employee puts down 100 rand towards the pension, I, the employer, will also put 100 rand down towards the pension as a contribution. Right. And then they say that contributions are debited to the respective salaries and wages account. All right, so one thing I want to make clear of, yes, the business will always have contributions. Okay, they basically contribute to your pension fund, your medical aid, your UIF, and obviously it works different from business to business. In this case, the business contributes to the pension fund and the UIF. The pay as you earn is an individual expense. It is not a business expense. So when you're working out the business's expenses, all you're going to put down is the contributions that they obviously have to pay, as well as the normal salary that they give to the employees. Pay as you earn will be deducted from the employee's own income, not the business. I have to make that very clear. Then number 2, repairs of 2,000 were undertaken to the factory. Vilakazi Shoe Factory have paid this, and it is included in the rent figure for the factory. However, it is the responsibility of the owner and will deduct the amount offered their rent that they owe for February. Rent has been unchanged all year. Okay, that's a calculation that we will have to work out. Commission on sales amounts to 1% of all sales. Provide for commission still owing. Alright, so we need to go and find out how much sales have we made during the year. Alright, then number 4, Insurance on the administration office includes a premium of 12,000 that was paid for the period 1 July 20.7 to the 28th of June 20.8. Now, very important, that is obviously over our finance, not in our financial period, so we've got to work out it has been prepaid. It's prepaid expenses. Remember the matching principle. We are only interested in what actually happens in our financial year, all the money coming in and all the money going out. Number 5, 75% of the consumable stores are used in the factory and the balance in the administration and selling department equally. And then they tell us how many units have been produced during this year, 23,373. So based on that information, we can complete the following activity. All right, remember, as it is with all your financial statements, you always have to work out your notes to the financial statements to get your final figures. All right, so I'm having a look at direct material costs. What are direct material costs? Direct material costs are the actual things being used to make the product. All right, it's the materials that go into the final product that are converted during the manufacturing process into what? A final product. All right. So our opening stock, according to our information given to us, is 160,000. There is our 160,000. And then let us see where have we purchased more raw materials. You will see raw materials purchased on cash, raw materials purchased on credit, carriage paid thereon in cash. Remember, you are paying for your raw materials to be delivered to your business. And then very, very important, raw materials issued for production. They are literally giving you the final figure of note 1. They're giving you the total direct material cost. So you will work back to figure out everything else. So let us go and do that. You see, they don't give us our balance at the end of the year, so you have to work back. So based on that, we now figured out they gave us the direct materials that was used during the year, the total amount, which was the 427,150. Where did I get that from? They gave it to us. Raw materials issued for production. They gave us the total cost of it. And then our opening balance was 160. They gave that to us as well. And remember, we have net purchases. Anything that has been, any raw material that has been purchased during this financial year. And yes, we had on cash and credit as well. So it is going to be 280 plus 70,000. And that will give us a total of 350,000 Rand. All right, not forgetting carriage on purchases. What is carriage on purchases? You are paying for a delivery expense. You are paying for your goods to be delivered. And that amount is 4,700 Rand. 4,700. So if we add all those figures, those three figures up, we will get a total of 514,700. What totals am I speaking about? I'm talking about these three figures. I'll add it up in order to get the total. Your closing stock will always be subtracted because it's what you never used. All right, we want to account for what we have used. Since seeing we have to work out our closing stock, you have to work back from the total material cost, the total direct material cost. So 427,150 subtract 514,700, you should get a figure of 87,550. All right, remember when you are working back matrix, what will be added will now be subtracted, and what should have been subtracted will be added. So in this case, we needed, if we worked forward, we would have added the 514,700, but because we are working back, you will subtract it to get your closing stock value. All right, so that will be note 1 that you can immediately put at your production cost. Material, direct material cost was worth 427,150. All right, let's go to the next note, which is your direct labor costs. Direct labor is the actual factory workers that are working on the product, directly with the product. And what did they say? They didn't say anything there. Wages, direct labor, there they've given it to us. 348,000 Rand. No calculation needed. They have given it to us, and we can say factory wages. Why am I saying factory wages? Because it fell under the heading wages. And that was 348,000. Okay. 348,000, and you'll put your total down there as well. 348,000, and we can immediately go to direct labor costs. Note number 2 was 348,000. Now remember, ladies and gentlemen, how do I get direct costs or prime costs? All right, you're going to take the numbers, the values of your direct material costs and your direct labor costs. Add those two together in order to get prime costs. So 427,150 plus 348,000, I should get prime costs of 775,150 Rand. Okay, moving along. Factory overheads. These are all expenses incurred by the factory. No other department except your factory expenses. All right, so consumable stores. Consumable stores is always a tricky one because you will have consumable stores on hand giving you an opening balance, and you bought or purchased consumable stores during the year. But of that, you may also have consumable stores on hand at the end of the year, which you obviously have to subtract. So you will always have to look out for that little trick. Let's go and see if we've got consumable stores opening balance. Yes, we do. 9,400 Rand. Did we purchase any consumable stores during the year? Consumable stores cash purchase, yes we did, 19,800. Do you see this matrix? We've purchased. So obviously you're going to be adding the 19,800 to your consumable stores. 19,800. Did you have a closing balance for your consumable stores? Yes, we did. We have to subtract that because it becomes an asset, and we are only interested in the actual expense that we incurred as a factory. So I'm subtracting consumable stores on hand that we never used. Minus 3,900. Okay. Now remember, ladies and gentlemen, we had a additional information on consumable stores. They told us that 75% of consumable stores are used in the factory. So what do? We done that calculation, but of this only 75% of the value will be used in your factory. If you work it out, you should get 18,975 Rand. Indirect labor. Indirect labor is people who work in the factory but not with the actual product. Example, your cleaners. Alright, so they've given that to us. There's your indirect labor, the 39,600. Then we have salary for the foreman. A foreman is a supervisor, someone who is managing the people who work in the factory, making sure that they are doing things accordingly. So the salaries for the factory foreman was 96,240. But remember that there was an adjustment for this. The factory manager, foreman, supervisor was given an increase of 5,000. So we have to add the increase of 5,000. And we have to work out the 1%, obviously, of that increase for UIF as well as for the pension. So they told us that the pension was 8% of the 5,000 and 1% of the 5,000 for UIF. So let's go and work out pension fund. 5,000 times the 8%, 400 Rand. So we have to add that in. So plus 400. And then obviously 1% of the 5,000 Rand is going to be 50 Rand. Okay. Close in my bracket. Am I interested in the pay as you earn? No, I am not. I'm only interested in what I, the business, will be paying the salary foreman. Alright, if we add that up, we should get a total of 101,690. Moving along, remember we always have depreciation. Every time we use our equipment or vehicles, the asset loses value. Depreciation on the factory plant, it was 6,000. And then we also had maintenance. And let's go see where our maintenance is. Maintenance of the factory. Okay, do you see our keyword? Factory, 12,155. And then we have insurance. Now I'm just going to draw your attention to the adjustment that we went through of insurance. They said to us that insurance on the admin office includes a premium of 12,000 that was paid for the period 1st of July 20.7 to 28th of June 20.8. So now, ladies and gentlemen, it's always important to draw a timeline when you are dealing with these type of adjustments. Know when your year ends, and according to our activity, our year ends on the 28th of February. $20.8. Anything after that is paid in advance, prepaid expenses. So now I'm going to just change the color over here. This insurance premium was taken out on the 1st of July 20.7. 1st July 20.7. And it expires on the 28th of June 20.8. So around here. So how long have you paid this insurance policy for in that advance period? So February, March, April, May, and June. We paid them 4 months in advance. Remember, anything that has been in advance must be taken out because we only interested in our actual financial year over here. The total premium of the insurance, they said, was 12,000 Rand. We're going to divide it by 12 to get what would we have paid for insurance per month. And obviously that is going to give me 1,000 Rand. Now that I have the per month, I can work out how much I have paid the insurance in advance. 1,000 Rand times 4 months, 4,000 of our insurance premium has been paid in advance, and I will need to subtract that from my insurance. And let me just double check. Insurance on the admin office. Okay, so this would obviously be for the admin block, administration, but not the factory. So when you're working out your administration costs, when you're doing insurance, this is what you need to subtract from the amount. So that was just the adjustment that we worked out. So let's go to insurance. They gave it to us. That is 12,480. There was no policy premium that went down there. So this is 12,480. And then there's one more thing that we never took into account, and there's no space, so I'm just going to write it really small over here, is rent. The rent for the factory is 21,800. Okay, but remember we had an adjustment. Number 2, repairs of 2,000 were undertaken to the factory. Vilakazi Shoe Factory have paid an amount, and it should be included in the rent figure. So the 2,000 is included into our rent figure that we have over here, the 21,800. We have to take it out because rent and repairs is different things. Okay, and then from there we have to work out what has been paid. Okay, so however, it is the responsibility of the owner, and will deduct the amount of their rent that they owe for February. Rent has been unchanged all year, so we still have to pay what we owe. So let's go and work that out. So if our rental amount for our factory came to 21,800, I am going to subtract the 2,000 Rand that was charged over there. $21,800 subtract out 2,000, we should get 19,800. 19,800. Then I'm going to divide this by 12. So I'm going to divide it by 11. Sorry, why am I dividing it by 11? Because they told us that however, the responsibility of the owner, and will deduct it off the rent that they owe for February. So we owing rent for February. So how many months in total have we actually paid our rent? 11, with 1 month being outstanding. So remember, you'll always take your balance divided by the number of months that we have paid, which is 11, and that should give us 1,800. So now I'm going to go and add that 1,800 to my rental amount. So we know for a fact that it was 21,800. I'm subtracting the amount that was for repairs, and I'm adding back the rent amount that I should have paid for February but have not as yet, which will give me a total amount of 21,600. Okay, that's all our factory overhead. So if we add it all up, we should get a total of 212,500. 212,500. So I can go to my production cost statement, and I can put my factory overheads. From note 3 that I got it from, and it was 212,500. If we add everything up, I'll take my prime costs and my factory overheads. I should get a total of 987,650. Right? Remember, they told us our work in progress at the beginning of the year. Did they give it to us? Yes, they did. It was 70,000. So we can just add the information here that's been given to us. Did they give us work in progress at the end? Yes, they did. 124,700. So we can go and put that in. And remember, that's in brackets because it's still a work in progress and we only want finished goods. Okay. So 124,700. Okay. Let's just add these two figures up. We should get a total of 1,057,650. If I subtract my work in progress, I should get cost of production worth 9,393. Oh my word, 932,950 rand. Sorry, blonde moment. Alright, so let's move on to the two notes that we have to complete for our income statement. So the selling and distribution, what did they say about that? Yes, we have salaries, which they told us was selling and distribution staff, 76,000. So all we're going to do is flip it in there, 76,000. There was also depreciation. Sales vehicle, the 34,300. We have bad debts. This is the only department that can work out bad debts, because when you sell, there is a possibility that they may not pay you back when you sell on credit, and then you have bad debts. Okay, and the bad debts they're telling us is 1,120. Don't allow yourself to be a laughing stock and add bad debts in administration cost, because it's not supposed to be there. And it's not supposed to be at factory overheads. It's supposed to go to your selling and distribution costs. The next one is commission on sales. So this is also a little bit of a calculation that we need to include over here. And obviously we need this. Sales, let's go look at our information. Sales, finished goods, there's our sales amount. So our sales is 1,080,000. Let me do the calculation here. 1,080,000 times 1%. It's 10,800 rand. All right, so you can go there, commission on sales, 10,800 rand, and show me your calculation. And then we have consumable stores. Remember, they say that after the 75% of the consumable stores is taken for the factory, then it will be divided by 2. All right, so if Here's our consumable stores. It was 9,400. Let's do it there. 9,400 plus what we purchased during the year, the 19,800, subtract what we had on hand. That is 25,300. Of this 25,300, the factory uses 75% of it. So you obviously need to take that 18,975 out. 18,975 minus 18,975. So this is the balance that's left. That needs to be divided by 2 towards our selling and distribution as well as our admin. And remember, in the beginning of the activity, they say that we needed to round off to the nearest rand. So it's going to be 3,163. 3,163. Okay. If we add our selling and distribution costs up, we should get a total of 125,383. Where am I taking this to? I'm taking it to the income statement, selling and distribution costs, note 4, and it was 125,383. And then we need to work out our admin. We had salaries that they gave us, and that is worth 56,100. They gave us that. Salaries, depreciation. Remember, it's not yet. So depreciation on the office furniture, it's 4,800. Remember, your admin has got to do with your offices now. Then we have the insurance. Remember your adjustment that we completed over here, the 4,000 that needs to be taken out because it has been paid in advance. So you're going to take, what is the insurance figure over here? Admin, it was the 22,440. And you're subtracting the 4,000 that doesn't fall in your financial year, 18,440. And then we have sundry admin expenses. Which was 33,110. And then they also paid rent. Let's go and have a look at our rent. Rent expense, admin office, 11,660. And then last but not least, the consumable stores that was divided. And remember, it was divided equally. So it's going to be 3,163. If I add all of that up, I should get a total of admin costs worth 127,272. 127,272. I need to add note 4 and note 5 up to get my total other costs, which will be in brackets because it's expenses paid, 25,265. All right. Now we need to go and find out where are we going to get the information. They already told us that our sales amounts to 1,080,000 rand. Sales, where is it? Here's it, sales. And then they told us our markup. Now remember, your markup will be selling price minus cost price No, sorry, that is to work out markup. You want to work out your cost price. Cost price equals to selling price times 100 over 150, basically 100 plus the markup. And our selling price was 1,080,000 times 100 over 150. And you should have gotten 720,000. So I'm going to place my 720 over there, always in brackets. And now I can get my gross profit worth 360,000. Okay. Okay, and it is that simple. I just need to answer the other few questions with you. They told you that you needed to calculate the unit cost of producing the shoes. So you are going to take the cost of production of finished goods. Where are you getting this from? Cost of production of finished goods. That's what you are taking, the 932,950. 932,950. That is how much your complete production cost came to. So all in total, the products that you produced is 932,950. Did they tell us how much products we produced? Yes, they did. It was given in our information over there. Total units produced 23,373. So I'm going to divide it by 23,373. So let's work that out. 950 divided by 23,373. So the cost of the production is going to be 39.9, but we're rounding off to the nearest rand, so 40 rand to produce a pair of shoes. Then they say calculate how many shoes was sold. So we're going to take the 40 shoes, the cost of one shoe times 50%. Where did I get this from? My markup, 60 rand. So the cost of one shoe is 40 rand, and obviously you add in your markup. For a different way, you're going to say selling price equals cost price times 100 plus the 50% over 100. And we know the cost price per shoe is 40 rand times 150 over 100. 40 times 150 divided by 100, 60 rand. All right, 60 rand. From there, you're going to take, that's your selling price, you're going to take the total sales, which they gave us, the 1,080,000, and you're going to divide it by the cost of one shoe sold, one pair of shoes sold. And in total, 18,000 pairs were sold, which is very good. Okay, moving along. Okay, that's everything that we needed to answer. I hope that this clears it up for you. So I just want to bring your attention to the analysis of production cost statement, which will be in the next video following this.